Hello everyone, welcome back. I hope your day is starting off just great. It's fall. Look at the beautiful colors all around us in this fantastic country. This particular photo shared by Mike. This is Lac Saint-Jean in la belle province de Québec. Merci d'avoir partagé cette photo dans le Je choisis le Canada group. I don't know how to say group in French. I tried my best. This is my favorite time of year in Canada, and it makes me extra happy. But there's one person that seems a little upset. That's right, she's upset again. Now, what could possibly make Danielle Smith upset again? We were doing so well. She seemed so happy when the federal government announced that it would fast-track this multi-billion-dollar project to transport natural gas from Northeast BC and Alberta to the LNG facility in Kitimat. That's been put on the list of nation-building projects and is going to proceed full speed now. And she was so happy knowing that this project was going to gather a lot of natural gas from Northeast BC and Northern Alberta and transport it to the LNG facility in Kitimat and sell it for a higher price to markets in Asia. But her happiness didn't last very long, and now she's upset again. And guess who she's upset with? Of course, she's upset with the federal government. Alberta Premier blames Ottawa for Imperial Oil job cuts. Why did she blame Ottawa? Well, I could go on with a long-winded explanation of how populist politics works, or I could just paraphrase one of our past prime ministers who explained this phenomena probably the best. Well, if you ask me how the Canadian politic work, well, it's simple. If the municipal government have a problem, they blame the provincial government. If the provincial government have a problem, they blame the federal government. And if the federal government have a problem, we blame the American. It's easy. That's how it works. But, for me, I concentrate to make the best decision. And I try to put the puck in the net. And I think I did a pretty good job. And you see, Danielle, that's how it works. I know the game you're playing. That's how it works in Canada. Now, despite Danielle Smith's complaints, quoting here from her, the industry for the last 10 years has been hampered and hobbled by federal government decisions. If we can realize the aspiration of building our pipelines north, south, east, and west, doubling our production, then there's a lot of opportunity for people to be able to get re-employed in this sector. But the reality of the situation, of course, is a little bit more complicated than that, and reported here on Yahoo Finance, a site that concentrates on the economic perspective, Imperial Oil to cut 20% of workforce by end of 2027 in restructuring effort. 20% workforce cut globally. And the company's statement reads, leveraging the rapidly advancing technological environment and the growth of global capability centers, this restructuring plan advances our long-standing strategy of maximizing the value of our existing assets. And let me translate this for you. They could have just easily said, we're doing this so that we can make more money. Another headline here on Yahoo Finance on the same day, Exxon to lay off 2,000 workers worldwide as oil prices slide. And no matter how you slice it or who you want to blame, all you have to do is look at the data. And here we are on Trading Economics looking at the price of crude oil, West Texas Intermediate. And you can see that back in June 2022, the price of oil was $116. And the last data point on this graph shows West Texas Intermediate trading at 62, 61. And as I'm recording this, it's even lower. And if we go straight to the Province of Alberta website where they report everything about the oil industry, the West Texas Intermediate price of oil, often the world reference price quoted in the media, averaged around $64.86 a barrel in August 2025, 15% lower than it was a year earlier. Western Canada Select, the price obtained by many Alberta producers of oil, averaged $53.70. That represents about an $11 discount. They call that a differential. That's about a 15% differential lower. And the average price of Western Canada Select in August is down about 12.5% from where it was a year ago. Now, why is the price of Western Canada oil so much lower than West Texas oil? And I know you've probably heard some rhetoric from politicians especially that say, hey, it's about time that we stop selling our oil to the United States at a discount. We're giving them a bargain and we have to build pipelines so we can sell oil to the rest of the world and get fair value for it. and that's just a load of BS, and I'll explain it to you here. It has nothing to do with Canada giving the United States a deal. It has everything to do with the fact that Western Canada Select is a lower quality product to West Texas Intermediate. Western Canada Select is a price that most Alberta producers get for their oil because most of the oil that Alberta exports is heavy oil and it needs a lot of refinement. Here's a graph from the same Alberta government website starting way back in 2005, I believe, to present, and it shows the increase in production of conventional oil as opposed to non-conventional oil. The conventional oil is the blue in the graph, and it's been fairly steady. The numbers don't matter, just look at the trends here. Over the past 30 years, the amount of production of conventional oil, which is typically produced how we imagine oil is produced. You see it in the movies, or if you go for a drive in the Alberta countryside, you'll see pump jacks going up and down. The company will drill a well. They'll start pumping the oil out of a conventional reservoir. The quality of the oil that's produced conventionally varies from well to well, but this is where some of the highest grade oils are produced in Alberta. And you can see that that type of production has not really increased over the past 30 years. The green line represents non-conventional oil production, and you can see that it's been increasing steadily over the past 30 years. And non-conventional oil basically means the oil sands. Now you may ask yourself this question, why would anyone want to buy this poor quality product? Why is the United States importing so much of our unconventional low quality crude to refine this crude to make gasoline and jet fuel and high quality products? Why would they do that? Because they export their own oil and they have better quality oil. They have West Texas Intermediate. Why don't they just use that? Why are they importing our inferior product? Are we just giving them a deal? Well, no. And the answer is simple. The answer is the same as it always is in economics. There's oil refineries in the United States, and they have one goal: to make as much money as they can. And so now let me explain, why would they buy this inferior product from Alberta rather than using a higher grade product that they have in their own country? Well, because there's a refinery that's already built and it runs, and there's a fixed cost to running the refinery. A lot of what governs the amount of profit that a refinery will make is how much it has to pay for the input and how much it gets for the output. And they can control what the input is, and they're much more interested in buying the worst quality, lowest priced input because they're going to run the refinery anyway and refine that stuff to make gasoline. So it's more profitable for them to buy Alberta heavy crude for $52 a barrel than it is to buy West Texas Intermediate for $65 a barrel. Because whichever one of those they refine, the output is still going to be gasoline. And because the refinery is there, it's built, and it's operating anyway, it doesn't cost marginally that much more to refine a heavier product than it does to refine a lighter product. So it's not about any one country giving another country a deal or one country ripping off another country. And simply building another pipeline to the west or to the north or to the east doesn't mean that all of a sudden you can sell your product for more. Because whoever Alberta producers find to sell their product to, whoever buys it is going to have to refine it so that they can use it in their cars and their planes. And when Danielle Smith just blurts out, well, we can build pipelines east, west, north, south, and we can double our production, and all of a sudden there'll be a whole bunch of new jobs, that's just ridiculous political rhetoric, because there's a lot of complications and market forces involved. Yes, it's a good idea for Canada to have multiple potential customers. That's always good. Diversity is good. And then you can have a little bit of a competition. For example, with the Trans Mountain pipeline that terminates in Vancouver, we have the option of selling that oil, and the main customer now is China. We have a little bit of competition going. Maybe Chinese purchasers will bid a little bit more than the American purchasers will, and there's a little bit of competition there. But the price is never going to increase and come anywhere near West Texas Intermediate or Brent crude from Europe or Saudi crude, some of it that's such high quality that it almost needs no refining. Western Canada Select will never rise in price to catch up to those. It will always trade at a discount. And the other thing to note, that if Alberta just doubled production, if we just, like Danielle Smith said, if we could just build these pipelines and double production, well, the one thing that would happen if Alberta just doubled production like that, it would just increase supply of the product that they're selling, and the price would probably drop. And the only way you could double supply and not have the price of that commodity fall is if there's infinite demand. And there's not infinite demand. In fact, that's one of the reasons that global oil prices are remaining depressed. Because as in this headline, OPEC weighs stepping up output hikes. OPEC is the swing producer. And OPEC is doing a very good job now of keeping a lid on oil prices so that they're high enough that they can make a lot of money, but low enough so that the rest of the world really doesn't have a lot of incentive to increase production. It's a game that OPEC plays to maintain their market share. And they're very serious in maintaining that market share, as we can see in these projections that are being made of how oil demand is going to start actually decreasing in the future decades as the world transitions into lots of different types of energy sources. So let me go back to this oil graph and explain another phenomena, because Danielle Smith is complaining. Yes, she's complaining, even though oil production has been increasing for the past 30 years in Alberta. But at the same time, you'll hear from the same politicians complaining that productivity in Canada isn't increasing. We're falling behind in per capita productivity. Now let me explain kind of a macroeconomic effect that's happening here. Because although oil production has been increasing steadily over the past 30 years in Alberta, the number of jobs in that industry has not. In fact, for the past 15 or 20 years, the number of jobs in the Alberta oil patch has steadily decreased. And it's decreased because most of the effort, most of the jobs in the past were to explore for and find conventional oil reserves. And you can look back at the beginning of this graph here in 2005, that conventional oil production in Alberta was just a little bit under the unconventional. And throughout time, as I explained earlier in the video, non-conventional oil sands production has been steadily increasing, but conventional has stayed the same. Well, you don't need a lot of new jobs, a lot of new people working to increase non-conventional production. You just have to expand another oil sands facility, increase the rate that you're literally mining the oil out of the ground. Increasing non-conventional oil production is mainly an engineering and cost savings exercise. And so ironically here, this industry as a whole, with increasing total production and decreasing number of people that are working in this industry, is showing very high efficiency. This is the definition of per capita efficiency. This is exactly what economists, when they're talking in a macroeconomic scale, says this is what the economy should be doing. We can produce the same number of barrels now with less hours worked. The industry is more efficient now. And industry becoming more efficient has always meant decreasing employment. So for Danielle Smith to just assert, hey, we could just build a couple of pipelines, double production in Alberta, and all of a sudden we'll have a lot more jobs, well, that's just not true. And in fact, if that was the goal, oil producers that are producing this non-conventional oil, their goal would be to double production and have less people working. So their cost of production per barrel is as low as possible, and they make as much money as possible. So is it Ottawa's fault that oil prices have been decreasing for years and oil companies around the world are trying to decrease their costs and a lot of them are announcing layoffs? Is it Ottawa's fault? I'm sorry, Danielle, but it isn't. I understand why you're mad. I understand that this could be good politics for, and there could be a lot of uninformed and easily manipulated people in Alberta that'll cheer her on and say, yeah, it's those damn liberals in Ottawa that are screwing us again. I understand that, but I tried to give you a little bit of information and present some data to explain it. I did a very detailed video about pipelines and what's required to build pipelines and why Canada has spent so much time concentrating on just building infrastructure to the United States. You can thank Prime Minister Brian Mulroney in the past for that. If you want to watch that video, I'll link it here in the top right corner. Thanks for watching the video. If you're enjoying my content, subscribe to the channel. If you appreciate all the work I do in getting this data and presenting it to you, consider becoming a channel member to support my work. Thanks, everyone. Have a fantastic rest of your day, and I'll catch you all on the next one. And come on, Danielle. Just cheer up a little bit. I keep looking for pictures of you on the internet. I can't find any of them with you smiling. Just give us a little smile. And if you smile and someone takes a picture and I find it on the internet, I promise I'll use it in one of my videos.